Welcome back to America's Commercial Real Estate Show. I'm Michael Bull. This segment's brought to you by CommercialAgentSuccess.com. If you're a commercial agent, do check it out. Well, my guest is Barbara Denham. She's an economist with Reis. And Barbara, as we talked about in the previous segment, a lot going on in the economy, a lot going on with the office market in general, with changes of how companies are using space. Let's talk about the investment market. What did you see for sales volume? How are investors looking at the office sector out in 2017?
Well, the office investment market actually took a break in 2017. There was considerably fewer transactions. The average quarterly volume was about 18 billion, down from like the 22 to 23 billion in 2016. So I think there's a lot of caution on the part of investors in the office market, namely because they see a lot of construction going on. The office leasing square foot per employee has been low. So again, there's been this wait and see mentality for investors in the office market. That should probably change overnight now that the tax bill has been signed and there is this fiscal stimulus. And the other thing about the bill is that, the tax write-offs for development costs are much more immediate. So there's a huge incentive to build. So we might see a lot of new building. But I think in sales volume, I think there's going to be renewed confidence as well. The cap rates kind of stagnated in the 7.2 to 7.5% rate for the office market. And that might drop finally. The apartment market dropped steadily because I think the apartment market investment sales optimism was much stronger, whereas office it's kind of stagnated. But I think that might change going into 2018 and 2019 as I think, as I mentioned before, there is this renewed sense that firms will be leasing more square footage per employee. There's more money in the bottom line, and so there's a lot more of a return to an office investment.
Right, so that 7.2 to 7.5%, that's an average over the country. That's kind of A and B type of properties, right, as an average?
Correct. It's very average, and it's...
Yeah, and then I guess you do expect some slight interest rate increases moving forward?
Oh, yeah. So the Fed should be raising the rates by 0.25% every quarter in 2018, and that will have somewhat of an impact on cap rates. Cap rates usually move in line with the Fed funds rate. But we actually have seen it's not a one-to-one correlation. Even with there was 3 Fed fund increases this year, and yet cap rates in the apartment market still fell. And they didn't really increase that much in the office market. It was very volatile. It went up and then down and then up again. So in general, we do see interest rates going up, particularly the Fed funds rate and mortgage rates. However, the cap rates don't necessarily move in line, and if there is more optimism, they could still defy the increase in the Fed funds rate. They could actually fall a bit, but it really has to do with what trades in the quarter. So if a lot of high-end office buildings trade in, say, New York and Washington and San Francisco, that will probably lower the average cap rate. Whereas if there's a break in those cities and there's more in, say, the Midwest and in Texas, you might see an increase because there's a lot of variability based on what trades in the quarter.
Right, that's a good point. We'll have people listen to the show and they'll call me and say, hey, can I get a 7.2 cap? Well, no, actually, we can get a 6 cap for that. Or another caller I get, I said, no, that's a 9 cap. So you are talking averages. So if you look in your crystal ball, Barbara, and you suggested, hey, if 7.2 to 7.5 is the average cap right now for the country for A and B, what would you expect a year from now? So you're expecting interest rates might be 100 basis points higher maybe, but we may have more demand because of what's going on in the office market. There's more optimism. What would be your guess in your crystal ball of an average cap rate a year from now?
Well, it could be, I would give a range. So it could be as low as 7%, and certainly lower in, again, the major cities. But if it follows along the lines of the federal Fed funds rate, it could go up to say 7.88%. But I'm more optimistic. I think it'll fall a bit. It'll probably, the average will be in the upper 6 to 7% going forward.
Okay.
If I could, again, look at my crystal ball, but we have to give a range because
Right.
it is a very volatile number.
Oh, absolutely. Well, is there anything else in the Tax Act, Barbara, that could impact the office market and the investment market overall? What about repatriation? Are some of these companies possibly going to bring some major money back in the U.S.? Could it impact this market?
Well, you have heard of major firms, especially banks and companies like Apple, that are going to take a huge tax hit because as they bring money back, they're going to have to pay a huge tax on that. Or if they have a huge, they're not going to be able to deduct their interest on as they could before. So there's definitely an interesting dynamic in terms of how firms will decide how to finance their debt based on the changes in the tax law. So that's going to be very confusing for a lot of banks. In terms of repatriating that money back, that should help, but again, it's going to be very complicated, and it's really hard to say how that will impact the commercial real estate market. I do think that the tax favorability for investing and developing will be a very strong positive impact. So I think it's really it's going to be great for developers because, ironically, even though most companies cannot deduct their interest on their debt, commercial mortgage interest is now deductible fully. So, and 1031 exchanges, which defer capital gains taxes on the sale of a property, that was maintained. So you can easily argue that the commercial real estate industry and investors were the biggest beneficiary of this tax bill for sure.
We're talking with Barbara Denham with Reis about the office market and now about the tax changes. So, Barbara, is there anything also in the Tax Act that could cause some companies that might have wanted to own their own space and be a user owner that maybe now they might want to sell? Maybe there'll be more sell-leaseback volume?
That's a good question, and I would have to think about it. But again, I guess if you're an investor and you take out debt for your mortgage, and it's a commercial use, you can deduct that interest. So it may be beneficial to you to buy your own space. But at the same time, if landlords can then deduct all their commercial interest, which I think they could have anyway, they may have a more favorable, they may give more incentives to firms to lease their space. So you have to evaluate that decision based on a number of variables. And it's almost not clear because everything was signed so late and a lot of CPAs and a lot of lawyers are still trying to figure out what it all means, that it's going to take a while before you can really evaluate what's best for you as a tenant. But sure enough, I'm sure a lot of tenants will be considering, say, buying that space if they can deduct their own interest.
And Barbara, what would you leave our audience with today related to the office market if they're a user of space or they're an investor in the office market or a developer maybe?
Well, yeah, and there's a lot to consider. I definitely think you should do your research, definitely do your due diligence, because then now there's the property tax deductions that you could consider if you're an owner. You have to pay your own property taxes, but is that deductible now as a business when it may have not been because it all went to the landlord who then deducted it? So all these things are, it's a very complicated time, but I do think business confidence overall is improved, and a lot of small businesses and large businesses should see an improvement to their bottom line, be it lower tax rates, tax incentives. So I would strongly urge any office user to do a lot of research and evaluate every option.
Yep, it's an exciting time. Barbara, thanks for joining us.
Oh, my pleasure.
And stay tuned, we'll have more on the U.S. office market right after this quick break. I'm Michael Bull. This is America's Commercial Real Estate Show.